There's definitely a difference in how these funds perform when you factor in the underlying index. And they've been able to generate quite a bit of recurring cash flow. And if you look at the percentage of income you'd have to reinvest in order to have a capital value that is stable and flat, that number turns out to be What's up, you guys? Welcome back to the Average Joe Investor channel. We are continuing our series of looking at investments that have launched earlier this year to see how they're actually looking with respect to their income and how stable their capital value is. Back in March of 2024, we talked about qdte, which is the Round Hill Investments Innovation 100 Zero DTE covered call strategy. And then the same thing, xdte, but with the underlying index being the S&P 500 instead. And we've now got about 6 months essentially of a track record under their belt, and we can take an opportunity now to see what's happening with the income. Is it strong? Is it consistent, recurring? And more importantly, I think, how stable is that underlying capital? Is there significant erosion in that capital value like we see with many income investments, or is it stable? And the cool thing about this video in the spreadsheet I built is I added an element to the spreadsheet that's going to allow us to confirm just how much income would need to be reinvested in order for this investment to be flat when it comes to capital value. So without further delay, let's dive in. Let's really quick, before we look at the spreadsheet, take a look at the basic details of these ETFs to make sure we understand how they work. So first, we've got qdte, and this is a zero DTE covered call strategy. So essentially what they're doing is, number one, they're owning the index, but not in a traditional sense. Instead of actually owning shares of QQQ or the actual individual stocks in the NASDAQ 100, instead, they're utilizing what's known as a synthetic strategy, meaning that instead of owning stocks or ETFs, they're owning call options. And then that's the first element, so that's their long position. And then they are actually selling on a daily basis, zero DTE, they're selling call options, covered calls essentially, on the NASDAQ 100. Here's how they explain it on their website. It's the first ETF to utilize 0 days to expiration on an innovation index, which is essentially the NASDAQ 100. qdte seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money zero DTE calls on the index. So that covered call, right? As we know with covered calls, it caps your upside appreciation in the underlying stock that you own, or in this case, call option. And they sell out of the money options every morning that expire that day. So they have overnight exposure with their long position. So if there's any gains in the underlying stock or ETF, then those gains will be realized, and then they wait until the morning to actually sell an out of the money covered call. Another unique thing about this fund is they make weekly distributions. Okay, not monthly, which is what you traditionally see with income investments, or the traditional quarterly when it comes to regular stocks or ETFs. Here we're looking at weekly option premium. You can see here the expense ratio is just under 1%, and they have $303 million under management. You can see this is their synthetic long positions. So these are the investments that they own. Okay, these are call options they own to give them exposure to the actual capital appreciation of the NASDAQ 100. You can see here they've got an 1888 call option here that expires June 20th, 2025. And they also have a March 21st, 2025 call option that they own with a strike price of 1696.69. And then you can see here, if you click on intraday trades, you can see the actual options that they sold. You can see the trade that they made this morning was on the 29th. They sold an option on the NDX. Okay, the call option is, the strike price is 19,510. They sold 162 of them. You can see here their distributions so far. Their distribution rate is 67.4%, which is pretty significant. But in my mind, I'm thinking if your distribution rate is that high, you probably have some level of capital erosion. So we need to really be cognizant of that and see just how significant that is. And really quick here, same idea with the S&P 500 xdte. Same idea, 0 days to expiration, overnight exposure to the S&P 500, and selling out of the money zero DTE calls on the index. Same weekly distributions. And if we scroll down here, same expense ratio, less money under management here with xdte. And then their holdings, same idea, SPX, instead of individual stocks or ETFs, they're actually purchasing call options on the SPX, which is the S&P 500 index, at 520 and 420.69. And these are the same expirations we saw with NDX as well for the NASDAQ 100. Then if you look at the intraday trades here, the trade they made today was on the 29th. They sold, which expired today, right here, the 56.30 strike price. They sold 147 of them, and what you'll find here generally as well with the S&P 500 and the NASDAQ 100, if you're looking at an apples-to-apples comparison, you're always going to get more premium with the NASDAQ 100 than the S&P 500, and that's because there's more volatility with the NASDAQ 100. And along those same lines, what you'll generally find as well is the NASDAQ 100 will collect more income, but the S&P 500 will have more stable underlying capital value. That's what I've seen with looking at all the different investments. And you can see the distribution rate here for xdte is 34.88%, which is far lower than the 67.4% for qdte, excuse me. So without further delay, let's jump into the spreadsheet. One of the biggest reasons that people do not get started investing in real estate naturally is because real estate is expensive and upfront capital can be significant. The good news for you is there are alternative ways to invest in real estate that cost far less. I want to talk to you about Realbricks. Realbricks is an amazing platform that lets you invest in real estate through fractional ownership. This means you can purchase shares in long-term rental properties, making real estate investment accessible and affordable. This means you can start investing in real estate without needing a massive upfront investment. It's simple and straightforward. Whether you're a seasoned investor or just getting started, Realbricks provides the tools and resources to help you make informed decisions. It's perfect for everyday investors like us who want to grow their wealth. With Realbricks, you can diversify your portfolio, potentially earn rental income, and benefit from property appreciation. You also don't have the headaches of managing a property yourself. If you want to learn more about getting started with Realbricks, head over to realbricks.com and sign up today. Or you can download their mobile app by visiting the Apple App Store for iOS users or Google Play for Android users. Thank you to Realbricks for sponsoring this video. So what I did here was I collected all of the data from March 7th, 2024 when this fund launched, all the way through August 28th, 2024. And I did that for QQQ, the NASDAQ 100. I did it for SPY, the S&P 500. Right here. Also did it for qdte and xdte. And what I did here as well, you'll notice that on qdte and xdte, the percentage reinvested field is up here. And what we'll do is once we look at the actual results, we'll look at how much of the income, if we traded some of that income back into reinvesting, back into more shares of the underlying ETF, how would that affect the stability of the underlying capital value, and how much income would we have to reinvest in order to have and maintain a stable value based on, of course, the last 6 months. So let's take a look here first. QQQ, for the record, on March the 7th was at a 445.45. And we're assuming, by the way, $100,000 invested. We're not reinvesting dividends as a general rule here, and then we'll look at that partial reinvestment here strategy. So $100,000 back on March 7th, 2024. Scroll all the way down here. Your $100,000 will be worth $105,814.34. For the S&P 500, that same $100,000 would be worth $108. Okay, so the S&P 500 overall did better over the past 6 months. Now, qdte, a little bit different here. So we'll take that same $100,000 and we'll go all the way down here to the end. That $100,000 will be worth $90,805.34. So we can already see a little bit of capital erosion occurring over the past 6 months, 10%. With xdte, that same $100,000 will be worth $99,675.95. Now again, this is not factoring in any distributions being paid out. This is just the underlying capital value. But let's talk about distributions. Well, total returns, first off, when you factor in both capital value and distributions, then we'll look at the distributions themselves. During this time frame, if you look at the actual income being generated, right here, which is in column M, we scroll all the way down, total income was $15,120.59. This is the actual weekly distributions occurring for qdte. Here's the actual total income during those 6 months. $15,120.59, which is pretty great. With xdte, we have total income of $10,104.84. So when you factor in for qdte the total capital value and distributions during that time frame, we get a total of $105,925.92. With xdte, the total would be $109,780.79, which for the record actually outperformed SPY, the S&P 500. The S&P 500 would be worth $109,099.28 whereas xdte was worth 109, 780, and 79 cents. Here's a look at the dividend income over that time frame. Here are all the dividends for qdte and xdte. You'll see a partial reinvestment column here. This data is the same, matching right now because I haven't made any adjustments to the partial reinvestment percentage. But you can see here the income is relatively stable here, and it's actually much higher over the past month in August. You can see the month-by-month breakdown over here on the right side, 783, then 22, 29, 22, 25, and then 43 in August, which is pretty insane. With xdte, it's 398, then 13, 21, 15, 17, 29. So not a ton of time yet to look at the track record, but so far, quite a bit of income being generated from this fund, much more so than we've seen from other traditional income ETFs like JEPI, JEPQ, QYLD, etc. Before we look at the actual partial reinvestment back into the underlying stock here in that percentage that allows you to get flat on your capital value, let's take a look at some of the actual underlying graphs for this data. So first off, we're looking at here that $100,000 investment, just looking at the capital value over time. We've got the light red here, the NASDAQ 100, light green is the S&P 500, then qdte in red, xdte in green. You can see that there's quite a bit of volatility. They're kind of going down together here. When the market goes up, though, we have natural caps that occur with covered calls, and so you can see that both xdte and qdte underperform the actual underlying indexes because these are unhindered and these have covered calls. And then they drop down together, and they're kind of recovering together here, but we definitely see a reduction in capital value. If we look at the capital value plus distributions, which would be essentially total returns, you can see it's much, much closer during this time frame. Again, same colors here. You'll notice that actually xdte outperforms the S&P 500, and right here qdte is essentially the exact same nearly as QQQ, the NASDAQ 100. Here's a look at that dividend per share for both qdte and xdte. Green is the qdte and red is xdte. You can see pretty consistent here. They start out kind of volatile and they kind of find their game right here in this range between 20 and 40 cents per share, and then it pops up again here most recently. And we'll see if that's sustainable. And then we've got the actual dividends being paid out per share, assuming a $100,000 investment. You've got a range here for xdte around, I'll call it 500-ish per week, well, maybe 300 to 500 per week. Whereas right here in green, we've got closer to $600 or $700 per week with qdte. Here's a look at that monthly dividend income on a bar graph here. Monthly, right? You can see that just naturally QQQ, or qdte in this case, is going to have more income, naturally. More volatility equals more income. Whereas the S&P 500 has lower income levels here, but has that more stable underlying capital value. So now let's talk about here, what would it take actually to, if we reinvested some of that income along the way, how much of it would we need to reinvest so that the underlying capital value stays constant or as close to $100,000 as possible after 6 months? So what we can do here is we'll change this percentage invested, then we'll look at the actual lump sum here. So there's some differences between, in this column here, this tells you just the lump sums, so this amount of shares never ends. This one here factors in reinvestments back into, so it takes a portion of the income every week. You'll see actual dividend income, amount that was actually reinvested from that portion, the net income actually being received by you since some of it's being reinvested, and then the actual net total of income you received overall, and then the actual total dividends that would have been received. So let's start with 10%. Let's say you reinvest 10% with qdte's income every month, okay? I'll also mark that over here for xdte as well. Change this to 10%. So going back over to qdte, you can see that in column O, there's the total income, and then portions of it are being reinvested right here in column P back into underlying shares. So it's starting at 2153 shares, now we're at 2155, 56, 58, 60, and we've got our net income and then your net total along the way. So instead of 783, you actually receive 705, 715, 643 instead, okay, and vice versa. So if we scroll all the way down here with qdte, right down here, you can see that it would have been worth $90,805 if you're just receiving all the dividends. That'd be your capital value, $90,000. If you reinvest 10% of it, your capital value goes from $98,005 to $92,263. So that's an improvement, but not quite close enough to $100,000, right? So let's bump this up from 10 to 20. Oh, actually, let's look at xdte first. So reinvesting 10%. The actual lump sum value before reinvestment of any of the income is $99,675, and here we're already at over $100,000. So with xdte, fascinating. So really we could have gone with like, I don't know, 5% maybe. So with 5% of your income being reinvested, you can keep the other 95%, at least based on the current 6 months here. You give 5% back into more shares, back in reinvesting back into your underlying capital, and you're able to maintain that. And your net income kept here is $95.99 instead of $10,104. So that's pretty good with xdte. Remember, the S&P 500, xdte in this case, actually does a better job than the NASDAQ 100 of preserving capital value in general. With qdte though, 10% is not cutting it. Let's pop this up to 25%. So we're reinvesting 25% of the income, keeping 75% of it. So of the 783 here, we're reinvesting 195 and keeping 587. In this situation, we scroll down. We would have had 9805 after 6 months if we were keeping all the income. If we reinvest, we're at 94,449. So still not great in this situation. Let's go to 40%, okay, which is getting to the point where it's like, man, I don't know, that's a lot of your income to be given up here. You give up 40% of your income, you're at 96,000 versus 90. So I guess what would the number be, right? The number actually, if you give up 63% of your income, you reinvest it here, you'll be at $100,000 essentially right here. 63% of your income. So you can see here some of this income here, you're giving up over half of it, and you're keeping 380, 380, 410, 453. Those aren't great numbers, right? So the reality is, if you're going to look at these two and you're massively concerned about capital value, then you want to go with xdte, because you still get pretty good income with xdte, but they do a pretty good job so far of maintaining their capital value. And the percentage of income over the past 6 months you would have had to reinvest is only 5% to maintain your capital value, which is pretty amazing. With qdte though, I mean, they're going to always give you more income than the S&P 500 xdte, but in order to maintain your capital value, at least based on the 6 months, it's going to require quite a bit of income here. Even if you were to only reinvest 25% and keep 75%, if you look at the actual dividend income, if you're reinvesting 25% here, looking at the actual income, you've got your actual gross dividend income if you were keeping all of it. But if you were reinvesting 25% here, those numbers go down quite a bit. And here's our monthly income here. We're at 587, 16, 21, 16, 19, 32. So, I mean, this is only $100,000. So that's a pretty good amount of income. But you're still experiencing some level of erosion of your underlying capital value. Time will tell if this fund continues to perform pretty well, which I would say generally, of all the income funds I've looked at, this one is uniquely performing very well. My key takeaways here for these investments, qdte and xdte. Number one, like I said before, if you're concerned about capital value and preserving that, I would go with xdte and accept less income in exchange for more stable underlying capital value, at least so far, like I said. If the goal here is to maximize income, this fund has shown some staying power here, and there's some value potentially in giving a portion of your portfolio over to this specific ETF, whether it's qdte and xdte, to give you some pretty stable income, knowing that you may need to reinvest some of that income in order to keep that value stable. But if you don't need to do that, if you just want to set aside $100,000, $200,000 if you had it to this and just set it and forget it, the income is going to be pretty significant. If you want to get access to this spreadsheet and all the other spreadsheets I create on the channel, make sure to join the Average Joe Investor Patreon community. Tons of value there. Other DIY cash flow investors looking to generate income in their own portfolios to learn from. Tons of value there. You can also get one-on-one access to me, talk about generating portfolio income, learning about how to sell options yourself if that's something you want to do. If you want to learn more, check out the link down in the description below. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of these comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.